We are going to make money this year. We are going to invest. We are going to be bulletproof. Tell your neighbor, we are going to be bulletproof this year. And today, I'm going to share with you another video that's going to help you invest better. Stay with me. Hello, friends. Welcome back to my channel, The Bulletproof Life. My name is Ronke Odeunwumi, and as usual, I'm delighted to have you here. As mentioned earlier, today I will be talking about investing, what you can invest in to build wealth, and specifically I'm going to be talking about real estate investment trust ETFs. Now, if you're a regular on my channel, you've probably watched two videos I made previously where I talked about REITs. In the first video, I introduced you to REITs, real estate investment trust, what they are, why you should know about them, why you should be investing in them, and how you can build wealth through real estate investment trust. In my second video, I talked about different real estate investment trusts that you can purchase, that you can invest in. In fact, I gave you 10 names in that video. So if you're here and you haven't watched those two videos, you need to do a catch up. You need to catch up on those two videos so that you're not behind. You will not be behind, though. Don't be behind. So you need to catch up on those two videos in addition to watching this one. So today, I'm going to be taking it a step further. But before I do that, can I ask you, have you subscribed to my channel? Are you a friend? Are you subscribed? Because if you are not subscribed, please do it by pressing the red button on your right. Don't forget to press the bell so you can get notifications every time I share a video like this one. Every time I share a video, so you can get that notification, you can watch it ASAP, and you can take steps to bulletproof your life. So let's go right on into today's video. Thank you for subscribing. Before I get started with the names of the real estate investment trust ETFs you should be investing in, let me give you a quick recap of what real estate investment trusts are, because I'm nice like that. So real estate investment trusts are companies that allow you to invest in the property sector with whatever money you have. They allow you to invest in multiple properties ranging from residential homes, retail parks, leisure centers, to commercial warehouses and healthcare structures through a single investment in one stroke. With REITs, you still benefit from the same revenue stream as you would if you had done a traditional real estate investment. You benefit from the appreciation, from the rental income without hassle. It allows you to go in with a lower capital outlay and less time is committed to that investment. The key point is that your REIT investment is not only 100% passive investment, but you can get started with as little as £100. So now you've been reminded about the benefits and goodness of REITs. Let's talk about the fact that you can now invest in a large number of REITs in one single investment. I mentioned earlier that I shared a second video, and in that second video, I talked about the biggest REITs quoted on the UK Stock Exchange, many of whom are also top performing ones. I gave you 10 names in that video. I gave you the name of 10 companies, 10 REITs that you can be investing in. However, with those 10 companies, some people have still reached out to me and said, we're not sure which one suits our long-term investment goals. It's difficult to choose. They want to consider what real estate markets you want to invest in. Do I want to do it in the UK? Do I want to do REITs in the US? Do I want a particular type of real estate structure? Do I want to invest in hospitals? You need to assess the REITs and look at what they're invested in, whether it's retail, whether it's residential units, and all of that, so much as so. And as usual, I'm here for the soft life. I want to give you soft life. I want you to invest, but I want you to do it in an easy, convenient way. And that is why I am bringing you ETFs. An exchange-traded fund is a fund that allows you to invest in a large number of companies, again, in one stroke. We are doing this thing, the easy way. So think about it. With REITs, you are already allowing yourself to invest in a large number of properties, with a little money. And then when you tack on the fact that it's an exchange-traded fund now, it means that you are also able to invest in a wide variety of REITs in one stroke. And with the exchange-traded funds, they are publicly traded on the stock exchange as well. So you can buy an ETF that includes a number of REITs in his portfolio, and boom, bam, bush, you are invested in those REITs. ETFs offer exposure to multiple stocks, shares, and funds in one investment so that you can ensure that you have a highly diversified portfolio rather than relying on the performance of just one or two of the REITs I mentioned in my video. Do you see what I'm doing here? Do you see what I'm doing? You're not only investing in a wide variety of properties through REITs, you are also investing in more than one REIT with your money. So we are diversifying that portfolio and lowering our risk. I don't like risk. I like to lower my risk and your risk. REIT ETFs are super convenient to invest in simply because they are quoted on the stock exchange. You can just invest in it at the click of a button from any trading platform, from any investing platform that you are registered on. Even more importantly, this also means that you can exit your position at any given time. You can sell anytime, ensuring that your funds are not locked up unnecessarily. They are also passively managed because they are tracking the performance of indexed REITs. So you pay less fees than if you were investing in an actively managed mutual fund that has a fund manager behind the desk. So let's go into the list of my best UK REIT ETFs for 2022. The first name I'm going to give you, the first UK REIT ETF I'm going to give you is iShares UK Property UCITS ETF, mouthful. This is the best UK REIT for domestic real estate industry. If you are somebody who wants to invest in the domestic real estate industry, you've got your heart set on that, then you might want to consider the iShares UK Property UCITS ETF. The iShares UK Property UCITS ETF is listed on the London Stock Exchange. It's a single country ETF, which means it focuses on growth from diversified exposure to the UK property market and tracks the performance of the FTSE REIT United Kingdom Index, which is composed of REITs and property companies that are invested in the UK. What I've just said simply is that if you buy this ETF, you are investing in the UK REIT market. You are investing in a set of REITs that have been indexed under the FTSE REIT UK Index, which allows you to invest in REITs that are specifically for the UK. All of their investment in the UK. 27% of this fund is invested in diversified REITs, 10.6% in office space, 9.7% in residential, 7.6% in real estate holdings development, and 5.7% in retail premises. This particular ETF offers a good blend of individual UK real estate investment trust and also blue chip stocks. Regarding the latter, this will include a selection of UK companies that are actively involved in the domestic real estate scene. For example, there's a 5.7% holding in Unite Group, which is also listed on the stock exchange with a market capitalization of 3.75 billion. So if you buy this ETF, you are investing in Unite Group, which is a REIT. This company, Unite Group, is a market leader in the student accommodation arena. In fact, I've lived in a Unite Group accommodation before during my student days. At the other end of the spectrum for this particular ETF is that it also holds other UK-based REITs, which include Assura REIT. Assura REIT is one of the ones I mentioned in my previous video. Tritax Big Box REIT, Primary Health Property REIT, I mentioned that as well. Land Security Group REIT, this is another REIT I mentioned in my previous video. So what this is showing you is that you are able to invest in a large number of UK REITs through this particular ETF. It allows you to diversify actively in the real estate sector. In 2021, this ETF returned 21% to its investors, and its expense ratio charged is 0.4% and comes with a tracking difference of 0.11. This fund has a UCITS risk factor of 5, where 1 is the lowest and 7 is the highest. It has a good MSCI ECG quality score, which is the environmental, social, and governance score of 6.8, with 10 being the highest score available. Dividends, which will cover your share of rental payments, are distributed on a quarterly basis as required by law. You can buy this fund through your ISA account or through your self-invested personal pension account. The top 5 holdings in this particular REIT is Segro REIT, Land Security REIT, British Land REIT, Unite Group, which I mentioned earlier, Derwent London REIT. I mentioned 4 of these in my video when I shared the 10 UK REITs you should be buying. So honestly, this particular ETF is a good one to invest in if you're somebody who really wants to invest in the UK domestic real estate market. Is a great one to invest in. 21% return is a really good one without all the hassles, without all the stress of being a real estate investor. The second REIT ETF I'm going to bring to you is the X-Trackers FTSE REIT EPRA Developed Europe excluding UK real estate UCITS ETF. Woo! That's a long name. Now, this particular REIT is invested in Europe, excluding the UK, and it's a great REIT because it reinvests its dividends back into the business and allows you to invest in wider Europe. So if you've invested in the UK through the iShares ETF, which I first talked about, you can then invest in the rest of Europe with this particular ETF. So it allows you to invest in Europe and excludes the UK from its portfolio so that you're not double invested in the UK. The net asset value of this REIT ETF is £54 million. So this is a small fund, and around 70% of its assets are denominated in euros, bringing an element of forex hedging to your portfolio. So when the UK fund is doing well, when the pound is doing well, you have the iShares for that. When the euro is doing well, you have the extra for that. The extra provides diverse exposure to European stocks in the real estate sector, excluding the UK, by investing in eligible listed real estate companies and REITs in Europe. Extra tracks the performance of the FTSE EPRA REIT Developed Europe excluding UK capped net return index. That's an index for REITs, and it provides physical exposure to the underlying assets of this index. In 2021, it returned 26.5%, and till date this year, it's returned 2.5%. Its expense ratio is 0.33%, and its tracking difference is 0.31%. In terms of the countries you will be invested in through this ETF, it's invested in Germany 29%, Sweden 19%, France 15%, and Switzerland 9%. Instead of distributing themselves to investors, this ETF reinvests its dividends and trades on the Deutsche Börse stock exchange. Dividend yield is about 3.52%, and its top 5 holdings are Vonovia SE at 10.14%, Deutsche Wohnen at 9.09%, Leg Immobilien and NAG, WFD Unibail, Rodamco Stapled Units, forgive my pronunciations, Around Town Property Holdings SA. These are the top investments of this particular ETF. The third ETF I'm going to share with you today is the iShares MSCI Target UK Real Estate ETF, UCRE. It's a great ETF because it includes government bond exposure. So if you're somebody who just wants to play it a bit safe, this one is good for you. It has a net asset of £73 million, also a small fund, and is invested entirely in the UK with targeted exposure to liquid real estate and government bonds. UCRE is eligible for inclusion in ISAs and SIPs, so you can buy it through your ISA account or your SIP. It's also eligible for ethical investors with a 6.29 ESG rating. Unlike other UK REIT ETF funds, this UCRE fund's inclusion of UK gilts introduces a diversifying factor to the ETF that other ETFs don't have. Average on loan securities as a percentage of the assets under management in 2020 was 2.95%. This ETF, as a lot of other ETFs, trades on the London Stock Exchange. It tracks the performance of the MSCI UK EMI Liquid Real Estate Net Total Return Index. This is another index for REITs in the UK. It provides physical exposure to the underlying assets of this index that I just mentioned. This ETF is 100% invested in the UK, and in terms of asset class is 64.3% invested in REITs and 34.9% invested in UK government bonds. Over the past 12 months, it has returned 12.4%, and year to date has returned 4.1%. Its returns might be a little bit low because of the fact that it's invested in government bonds, which normally brings a little bit less returns than if it was invested in equity or stocks or the real estate investment trusts. Its expense ratio is 0.40% and tracking difference is negative 0.3%. This ETF distributes dividends to provide an income stream for its investors, and its dividend yield is 1.03%. The top investments for this ETF are UK Gilts at 29.3%, Segro REITs at 12.78%, Primary Health Properties REIT at 6.25%, and of course it's invested in the UK government at 5.62%. It's also invested in something called Tritax Big Box REIT at 5.56%. So that is the third ETF I'm sharing with you. Just to do a quick recap, I've shared with you an ETF that's solely invested in the UK market. I've shared with you an ETF that's solely invested in Europe, excluding the UK. I've shared with you an ETF that's solely invested in the UK market, but also invested in the UK government, supporting Boris's business. So let's go on to the fourth ETF I have for you. The fourth ETF I have for you is something called iShares Asia Property Yield UCITS ETF, IDA. This is a great ETF for Asia. It provides exposure to developed Asian real estate companies and REITs with a focus on income, but with the proviso that the holdings must have a 1-year forecast dividend yield of 2% or greater. This is a medium-sized ETF with net assets of $535 million US. 40% of this is invested in the Japanese market, 24% in Hong Kong, and around 15% each in Australia and Singapore. The average on loan figure for this REIT is a little bit high at 20% and is expensive for a REIT ETF with an expense ratio of 0.59%. But if you are really keen on investing in the Asian market, you are really keen on having real estate in Asia, you want to own property in Japan, in Australia, you want to edge yourself for the Asian market, this is a particularly good fund to buy. The reason for the high expense ratio of this particular fund is because it accounts for costs associated with investing in countries requiring some currency risk hedging. IDA, this fund, tracks the performance of the FTSE EPRA Nareit Developed Asia Dividend Plus Net Total Return Index. Woo! That's a long name. The ETF provides physical exposure to the underlying assets of the index I just mentioned. And over the past 12 months, it has returned 28% and year to date has returned 7.8%. That's a good return. The tracking difference for this fund, however, is minus 0.67%. Similar to other ETFs, this one provides dividends to its investors and the dividend yield is 2.81%. It's heavily invested in REITs like Mitsui Fidosan, Links Real Estate Investment Trust, Sun Hong Kai Properties, CK Asset Holdings, and Center Group. These are the 5 key REITs this particular ETF is invested in. The last REIT ETF I'm going to bring to you is a firm favorite, and that's because it's globally invested, especially with a lot of investment in the US. It is the HSBC FTSE EPRA Developed UCITS ETF and is a great global REIT ETF to invest in. It's invested globally with half of its investment in the US. It's a small fund and it's about £137 million in size, and dividends are distributed quarterly. It has a UCITS risk indicator of 5, with 7 being the highest, a little bit high risk. It's invested 10% of its funds in other funds, including HSBC funds, and during exceptional market conditions is able to invest up to 35% of asset value in the securities of a single issuer. Both of these objectives provide flexibility to make this fund an all-weather contender. Is set up to allow itself to benefit from whatever economic condition we are in. It tracks the performance of the FTSE EPRA Nareit Developed Net Total Return Index and provides physical exposure to the underlying assets of this particular index. Assets under management for this ETF stands at 159 million euros. Over the past 12 months, it has returned 34.4% and year to date has returned 11.2%. This is why this REIT ETF is a big favorite for me. It has historically good performance. I like it very much. As a globally invested REIT ETF, let me share with you the heaviest weightings in terms of the countries in which it is invested in. It's invested in the US till about 51%. So 51% of its holdings are in the US, 11.4% in Japan, 5.5% in Germany, 5.1% in Hong Kong, and 4.9% in the UK. Its expense ratio is 0.40%, and tracking difference is negative 0.12. This ETF distributes dividends to provide an income stream for its investors, and its dividend yield is about 2.38%. Its top 5 holdings in terms of REIT names are Prologis at 4.6%, Vonovia at 2.67%, Digital Realty Trust REIT, Public Storage REIT, and Simon Property Group REIT at 1.74%. I have now shared with you the names of 5 ETFs you should be buying, to allow you to invest in REITs. If you have come this far in this video, I'm grateful. I appreciate you. I'm going to throw in one more name for you to invest in, so stay with me. The last final bonus REIT ETF I'm going to share with you is the iShares European Property Yield UCITS ETF, and it's just a great European ETF. It's another Europe excluding UK REIT ETF pick, so it's a bonus that I'm adding on to this video, and it's a REIT ETF that has a dividend yield of 2%, sometimes greater. The shares are denominated in euros, and it carries a UCITS risk score of 6, which is relatively higher. Its investments are concentrated in just 65 holdings with a net asset value of 1.76 billion euros, so making it a medium-sized REIT ETF with a bias towards Germany, where 43% of its assets are domiciled. So if you buy this ETF, you are owning a lot of property in Germany. This ETF, you can buy it through your SIP or through your ISA, and it tracks the performance of the FTSE EPR REIT developed Europe excluding UK dividend plus net of tax total return index. It provides physical exposure to the underlying assets of this index with assets under management of about $1.6 billion. Over the past 12 months, it has returned 23.5%, and year to date has returned 2.7%. The largest European country weightings for this ETF is Germany 43%, France, Sweden, Switzerland, and Belgium at 8.4%. Its expense ratio is 0.4 with a tracking difference of 0.3%. This ETF provides an income stream for its investors as well, with, like I said earlier, with a dividend yield of 2% or a little bit more than that. So, ladies and gentlemen, you have 6 different REIT ETFs you can be investing in. You only have to type all of their names into Google or into your investment platform, and it will come up and you will see it, and you will be able to invest in these REIT ETFs. I have come with a lot of numbers and percentages and figures and things like that because you guys have dropped comments asking me to share with you dividend yields and how these things are performing, and I hope this hasn't shown you off. I hope it's helping you to make your decision. I just want to throw it out there as well that this is not financial advice. This is not advice for you to make all your decisions on. It's meant to guide you. It's meant to shed light on areas where you want to have conversations with your financial advisor. These are the names you now want to talk to your financial advisor about and say, actually, I watched the video and this is what Ruke said about real estate investment trust ETFs. So I don't want you to take my video as 100% financial advice. This is what I need to do. This is what I'm going to do permanently. This is my financial advisor. No, you need to sit down. You need to do your research. You need to do your homework. You need to have conversations with your financial advisor before you make a decision. If you haven't, subscribe to my channel. Come on, please, come on, give me that subscribe. Press the red button on your right, and don't forget to press the bell so you can get notifications every time I share a new video. Come on, help your girl build out this channel, build up this channel. It's very hard work producing this kind of videos because it requires me to do a lot of research, to stay on top of my numbers, and to come at you with good figures, things that you can understand and go away with and think about and make decisions and take the next step forward. So people, that is it. Until my next video, it's been amazing sitting here hanging out with you, and I look forward to coming back next week Monday with another video for you. Until then, you have a fabulous bulletproof life. You take care. Bye bye.